everybody. It's Mike McCauley. It's Market Insights with Mike on Friday, April 30th, the last day of April for the year of 2021. 4 months have gone by. It has been a busy week and didn't expect it to be. So let's jump right on in it. There's a couple of things I want to add and cover this week that we put on our charts. The GDP, gross domestic product, I told you last week that report would be coming out. It did. In the first quarter, it shows that we were up 6.4%. That's accelerated from the fourth quarter of 2020, where we were at 4.3%. Remember, these numbers are annualized. So the first quarter 6.4. Now, the interesting part is the forecasts right now are saying they're expecting second quarter GDP to jump as much as 10%, which would be just an incredible number. Considering where we were 13 months ago, it's amazing. But this is what's called a consumer-fueled economy right now. So most of this is being done, most of this growth is being caused. Remember, it's a total output of goods and services. It's being caused by you. So you're going out, you're spending more money, you're starting to travel more, you're shopping, you're basically saying, I've got to get back to life as normal as I can make it. You're getting your vaccine and you're headed out. So that's got a lot to do with where we are right now on the GDP. These are just really great numbers to see. Widespread vaccinations are a big deal. Businesses are reopening. The stimulus does have something to do with it. People have money, they're willing to spend it. And we are at record level spending, consumer spending. Low interest rates is prompting a lot that's going on. We're seeing a lot of movement still in the housing industry, a lot of demand on houses. I talked last week that we think we're short about 4 million housing units, and we're running an annual pace of 1.6 million. So there's just a lot of pent up things going on, a lot of pent up spending, and that's what's driving the GDP. Pretty incredible numbers. We'll see what happens. The next question is, are we still in a recession? So this is a difficult thing to answer because a recession is defined as a sustained period of weak or negative growth in the real GDP, accompanied by a significant rise in unemployment. Well, we obviously had that last February, March, April, May. We had that rise in unemployment, but now you'll see in a second, we estimate that unemployment right now is at 6%. So this is actually a pretty good number. You've heard me say, my dad used to say 5% of the population doesn't want to work anyway. That's probably relatively accurate. I've said that over and over. So are we in a recession? Probably not. With that numbers coming down, the unemployment's down, the GDP is growing, a lot of things are happening. So are we safe? Maybe, and I'll talk about that in a second. But as far as recession's over, are we formally out? Nobody's actually said formally that we're out of it, but the numbers sure indicate that we probably are significantly past any concern about the recession being longer than it was. Jerome Powell's news conference this week, he again left interest rates near zero. That's not a big surprise. His asset purchases are remaining the same. They are not going to change it. He thinks that some asset prices are high. But that has to do with the economy growing and demand going up. It's basic economic 101. Demand increases prices. It seems unlikely that we would see inflation moving up in a persistent way that would actually move inflation expectations up. So what he's saying here is just reiterating what they've said to us before, which is they are intention is to keep inflation at 2%. If it goes higher than that, they're okay to let it go. And now we're back to walking the line between Keynesian economics and Adam Smith economics. Do we make changes? Do we get involved, or we just let it go and assume it's going to aggregate on its own? And at this point, as far as inflation, they're taking the Adam Smith hands-off theory, which is let's let it ride and see if it aggregates back to 2%. So that's kind of where we're headed. None of this was a surprise. It basically reiterates what he's been saying for the last couple of months. So that news conference was basically a support. Consumer confidence, this is a huge number that came out. Our base was set in 1985 at 100. So that's like what we would call par. March, it jumped up to 109. April, it's at 121.7. This is a huge number. That means that you, the consumers, are very confident about the economy, which is just great to say. Right now, my volatility index is running at about, where are we at today? 18 today. It's a little bit high. But overall, the global confidence is up 10, Asia Pacific's up 8, Europe's up 11. Worldwide confidence is high. This is good for the economy. It's good for the future. It's good at least for the short-term future. I will be really interested to see what happens when we get that next figure. Do we maintain that really high confidence level, 121.7? It's just a super number to see right now, and we'll keep our eyes on it. So then we have the U.S. indices where we were yesterday. The reason I'm bringing this up individually is because we hit in the last couple of days, we hit 52-week highs. These are amazing. We got the Dow Jones at 34,060 was the close. The high was 16th of April. And then you have the NASDAQ at 14,082. The high was yesterday. The S&P 500, the high was yesterday. And what I wanted to touch on here was I went back to the pre-COVID high, which was basically the middle of February, because what I wanted to take out was that COVID drop that we saw in March. You know, we don't want to count that. That was a huge bottom. So I don't want to count that. What I wanted to look at is what the market has done since the pre-COVID decline. And these are the numbers on the Dow Jones Industrial Average since the 12th of February, where it was at 29,551. It's up 15.3%. Pretty amazing number. 43% on the NASDAQ, 24% on the S&P 500. These are great growth numbers for a year. It's obviously a little bit more than a year, but it shows that we went through the COVID recession and we came out pretty strong. This economy has a lot of resilience. So the Dow Jones Industrial Average, you can see if you look over to the far right, we have some flattening going on, and the merge of the 7-day, 14-day, and the 1-day numbers is still happening. I talked a little bit about that last week, and you can see that they're coming well in line. That's because we've had a couple of days up, we've had a couple of days down, and we're basically flat for the week. And that's not a bad thing at all. We just keep an eye on it and see where we are again for the year. We've done really well. So right now we're flat, and the moving averages are where they are. My concern will be if I start to see those moving averages drop, then we'll start to be, you know, where are we going? Are we looking at another little bitty decline? And we'll see what happens. These are the sectors. This is the 2021 year-to-date performance. Oil, gas, and energy, that had a lot of room to go, so we're okay there. Then basic materials have been driven by the housing market, consumer goods, also the housing market. Healthcare, financials, financials are also the housing market. Healthcare is about where I would expect it. I would actually expect that to be about 9%. So just from historical standpoint. Industrials are great, technology 11.5. There's some concern about that. Are we going anywhere with it? Information technology had been a leader for the last 8 years. I said early on this year, I thought that this year the information technology would step back a little bit, and so far it's proving me correct. The utilities of 5.5%. For utilities, that's about where I would want things to be. So all of this is kind of in line with where we expect. There's no real big surprises, but things that will start to take shape more as the second quarter develops. Our world markets, where we were this week, where we are year to date. Year to date on the far right-hand side, you can see that everybody's up. You figure that's about, that's 4 months right there. And that's really pretty good for 4 months. In some cases, those look like a reasonable year return. So if we can just kind of keep that pace up, we're going to have a really good year. You can see last week, right there in the middle of the 22nd of April column, that's what the performance was last week, and that return is on the right-hand side. And that salmon color, which kind of is red, that's what where we were down. And you can see the American indices were essentially flat. So that's where we are on the world markets this week. Treasury yields. This is the end of the month, the last day I post these. Treasury yields are always done on the last day. You can see the 2-year right now is 0.1641. The 10-year is 1.63. Those are not stellar, those are not outstanding, but if you've been listening, you know what we look for is that spread between the two, and that's not too bad. And again, to avoid that inversion, which we saw last October, and that's I don't see that happening anytime soon either. So we'll kind of have to see where that goes with the Fed pounding zero rates or near zero rates. I don't see that doing a whole lot over the next couple of months, maybe even a year. Unemployment claims, big drop in unemployment claims. Last, what the number that came out yesterday was 553,000. This is just significantly down from where we were. And again, we're getting down there where we need to be. We need to be about 250,000 a week. We're at 553. That's not terrible. We actually see jobs are being created. People are going back to work. We have a couple of issues. I did get an interesting email from a client of mine who's works for a pretty big company. And he outlined for me some of the problems they're having as far as hiring is concerned. And I'd like to hear from anybody else that's got a company and what they're experiencing, because his difficulty that they're talking about, what they're seeing, doesn't really reflect the unemployment claims that we're seeing. What it shows is a little concerning to me, which is an unwillingness to work to some part. So anybody else that has similar things, I'd like to hear that. It's a pretty interesting thing to talk about. But we were down to 553. We'll see where that goes next week. Here's our calendar. First off, it's May Day at First Option Bank today, First Option Financial Services. May Day in the office today. We're here from 10 to 4. Consumer spending and consumer sentiment come out today. Those will both support what I talked about a few minutes ago as far as where we are as confidence is concerned. I think that'll just support it. On May 4th, we'll see the trade deficit. That's going to be an interesting number. We continue to spend money. And then on May 7th, the non-farm payrolls, we'll see how that compares to the unemployment filings and where we go from there. And then again, May 9th is Mother's Day. Tomorrow is the Apple Blossom Parade in St. Joe. I'll be driving the truck for that. It starts at, I think it's 9:30 in St. Joe, Missouri. So come on out for that. We're happy to see you there. We'll be driving along in the truck with some of our friends from the bank up in St. Joe, and look forward to seeing everybody out there. Next week should be a quiet week. Earnings have been coming out this week, and I didn't say too much about that. That's because the earnings have been actually very good. They're numbers that were positive. Some are surprises. Amazon's numbers completely caught everybody by surprise how good they were. And so it is like a mini earnings season. It's the end of a quarter, and those numbers are all coming out quite positive. So in general, my thoughts on the economy, it's good. It's been resilient, great. We're past the COVID recession, it appears. A little concern about we are spending a lot of money on the government end, and somewhere we're going to have to figure out how to pay for that. So we need to be concerned going forward about any implications on increases on taxes, capital gains tax, and it's way too early to start worrying about that. All those are now as concepts that still have to get through Senate and Congress, and we'll see where they get taken from here. But if anybody thought that there wouldn't be some kind of tax increase, and it's just what was expected, so it shouldn't be that big of a surprise. It's a matter of how it's structured and who gets the big blunt of it. So we'll see how that carries us as far as financials are concerned. It looks like today will be a bit of a down day. That's okay. We had the NASDAQ and the S&P 500 both hit 52-week highs yesterday. So going down a little bit today is not any concern at all. So we're back here next Friday. It'll be the first Friday in May. We'll see how the week goes and see if we get any surprises. We're going to have a great day of weather tomorrow. Everybody get out to the parade if you can. Get ready to plant. Remember, Pa Sid used to say, never plant anything for Mother's Day. So resist that urge for another week or two before you start putting your flowers out, because you never know when the weather's going to get cold. We'll see you 1 week from today. Thanks for joining us, 8 o'clock every Friday morning. Thanks to Mallory for being behind the big blue First Option curtain. She takes care of production, editing, and putting all the technicals together. And it's just it's one of the favorite times we have on Friday mornings, get together with everybody. It's nice to see you, and we'll see you 1 week from today on Market Insights with Mike. Thanks.